How much Cardano or its token ADA do you need to become a millionaire in the next bull run? Today, I'm going to do some moon math to find out what it's going to take to achieve those millionaire dreams. Renowned crypto influencer Bitboy You has discussed how Cardano holders can become millionaires, analyzing 3 scenarios based on ADA's potential price surges. Should we be anticipating some spicy moments in Cardano? Well, this is coming from Bitboy, so it is worth believing. In a recent video, Ben Armstrong, otherwise known as Bitboy, discussed the potential of Cardano to make investors millionaires. Armstrong emphasized the significance of ADA's current price and its potential for exponential growth in the next bull run. At the beginning of his analysis, Armstrong acknowledged that ADA was hovering around the $1 mark for an extended period, even during the bear market. However, he pointed out that once crypto prices start heating up, any bag of ADA could be worth a significant amount. Considering ADA's previous all-time high of $3.10, Armstrong estimated that accumulating just over 300,000 units of ADA tokens would make any investor a Cardano millionaire, and with ADA's current price of around 40 cents, it would cost approximately $120,000. Bitboy You, who openly disclosed his Cardano holdings and bullishness on the project, expressed his belief that the ADA's price would surge even higher, making the millionaire's milestone more attainable and reasonable. He expects ADA to surpass $3 during the next bull run, driven by factors such as growing interest in emerging economies and the upcoming Hydra upgrade. Bitboy presented 3 scenarios for ADA's future price. In the first scenario, where ADA's market cap reaches $175 billion, a good run-up in the crypto bull market, ADA's price could surpass $5. In this case, owning 200,000 ADA would equate to $1 million at the current price. The second is if Cardano manages to triple its previous market cap. ADA priced at $8 would result in a $280 billion market cap, and becoming a millionaire with that requires around 125,000 ADA, costing roughly $50,000 at the current price of 40 cents. Armstrong's third scenario involved ADA going parabolic, whether miraculously or logically, and threatening Ethereum's market cap. If ADA reached $10 with a market cap surpassing $350 billion, owning 100,000 ADA would be enough to achieve $1 million. Thus requiring a current investment of approximately $40,000. Bitboy highlighted the potential of ADA staking rewards, acknowledging that even smaller investments could yield substantial gains. For instance, staking 10,000 ADA, costing around $4,000, will be worth $100,000 if ADA's price reaches $10 during the bull market. And this inside of itself sounds good, right? Well, of course it is. But do not be quick to forget that so many things need to go right for Cardano to rise. Regulations are still raging, and Cardano might eventually become a target. Are we not being optimistic? Yes, maybe for now. In a remarkable escalation in the ongoing conflict between the crypto industry and the Securities and Exchange Commission, Coinbase has recently moved a federal court seeking a writ of mandamus. This rarely invoked legal maneuver is essentially an official request for the court to command a party to perform its statutory duties. In the given context, Coinbase's strategy employs a writ to press the SEC into adopting clear regulations for cryptocurrencies. This audacious move indicates a last-ditch effort, as obtaining a writ of mandamus typically involves overcoming great legal troubles. The SEC hit back by asserting that cryptocurrency regulations does not fall within its jurisdiction, the commission stated. The securities laws do not obligate the commission to adopt rules such as those proposed by Coinbase. The SEC views its mandate as maintaining fair, orderly, and efficient markets, yet it has been vague about whether it considers cryptocurrencies to be securities, an important point in regulatory clarity. In response to Coinbase's move, the SEC further contended that comments by its chairman, Gary Gensler, do not constitute official policy. Well, Coinbase and others argue that the SEC's evasiveness and subsequent enforcement actions contribute to the volatility and unfairness of the crypto market. Failure to provide clear regulatory guidelines and use enforcement as a stand-in for rulemaking could be tagged as a lack of discretion, according to previous Supreme Court rulings. Coinbase Chief Legal Officer Paul Grewal addressed the situation on Twitter, stating, "The SEC told the court that rulemaking might take years, and they're not in any hurry." The SEC confirmed that it was indeed working on rules that gave no definite timeline. While it could take years for a court decision on Amanda's petition, legal experts generally agree that Coinbase's request may have been premature. To make matters worse, the crypto market is in the red. In recent market developments, the US dollar has been demonstrating upward momentum, edging closer to the 200 exponential moving average. If a breakout happens, it could potentially propel the dollar even higher. This upturn of the US dollar could exert downward pressure on cryptocurrencies and other financial assets, propelling them to decrease in value. The correlation between the strength of the US dollar and the performance of cryptocurrencies is often inversely proportional. This implies that as the value of the dollar rises, it tends to drive the prices of cryptocurrencies down, and vice versa. Simply put, a stronger dollar makes it more expensive to buy cryptocurrencies, which are typically priced in US dollars. This subsequently reduces demand and leads to a decrease in prices. In addition, according to data from Into the Block, there's been a notable decrease in the large number of transactions and wallets on the Cardano network. But while everyone thought this could instigate a tragic fall for Cardano, something happened. This shift implies a significant exodus of whales from the network, which traditionally would have instantly triggered a decline in ADA's price. However, in a counterintuitive twist, ADA's price is exhibiting an upward trajectory. So how do we go about explaining this? One hypothesis to explain this phenomenon rests on the idea that the whales contribute significantly to the selling pressure on Cardano. On the cryptocurrency market, whales have often had substantial influence due to the large volumes of crypto assets they hold. They can create selling pressure when they choose to liquidate large quantities of a cryptocurrency, which can bring prices lower. Conversely, when whales leave the network, which seems to be the case with Cardano, the selling pressure decreases. This drop in selling pressure could be a driving factor behind the current rise in ADA's price. To an extent, that is an advantage. The upward price movement, despite the departure of whales, can also be viewed as proof of the robustness of the Cardano community. It shows that smaller investors and participants in the Cardano ecosystem are capable of sustaining the network, demonstrating the potential for decentralization and resilience within the Cardano community. Moving forward, the World Economic Forum has recognized the Cardano network as one of its most scalable systems. The network has been making speedy progress towards becoming the first chain that is peer-reviewed and flawlessly scalable. The proof-of-stake methodology, on which the platform relies, aids in its victory over competitors. However, there have also been dips in the value of this currency since Cardano reached its peak. The price projection is a little trickier than it may have been otherwise because ADA has seen more volatility in recent months. How is Cardano now? Is it alive or is it dead? Is a frequently asked question, regardless of the recent updates, collaborations, and upgrades. Perhaps we should use Bitboy's analysis to answer this demeaning question. Cardano is not dead. This can be said for sure. Yes, its performance has been far from impressive, courtesy of the crypto winter, stiffening regulations, and impatience on part of the investors. Cardano has been in free fall since reaching its all-time high. The coin has dropped by 75% during the past 11 months. But why is Cardano suffering so much? Crypto winter is most likely a word from the hit television series Game of Thrones. Winter was portrayed in the series as a time of turmoil. Similarly, the crypto market is in its crypto winter as it experiences a time of currency correction. In this vein, it is crucial to stay alert and be ready for any unforeseen market turbulence that can break out. Crypto winter has been affecting all cryptocurrencies and Cardano ADA is not an exception. And yes, the easy money times are over, thus making it tough for Cardano. When Bitcoin and Ethereum started to gain popularity, a lot of people started to invest in them and they were making a lot of money, and it seems like the easy money time would never end. However, those days are long gone, and now people are more careful with their investments. Bitboy's crypto analysis seems simple and is dependent on a lot of expectations and factors. Nothing comes easy, and Cardano is going through the most difficult means to carve its niche of success. Let's stay expectant though. Predictions from a famous crypto influencer like Bitboy can still be trusted. But that's going to do it for today's video. Make sure you subscribe and click on the notification buttons, and we'll see you in the next video.